Okay, let's start. Happy Monday to everybody. Hope you guys all had a great weekend. Today's segment, let's do a quick recap of what happened, of identifying what market condition we were in on Friday and how we could have easily traded it. So let's go to Friday. We were waiting for the job numbers, so we were obviously in a range. And right before the numbers came out, we broke out of that range. We started a small little trend to the upside, right? This is still ranging until we get over previous these two previous hour highs. We start stepping above and finding support on the 5-9 box, finding footing on the 5-9 box. I don't want to call it support because that's a whole different strategy and that's not what I'm talking about. So that's the biggest thing, like for me at least, maybe not for the viewers, is like where's price finding footing at, right? And like where's the floor, where's the ceiling, right? It doesn't mean I sit there and look at support and resistance. It's just common to say find support, find resistance. Um, but I don't really even know how to trade support and resistance. So the news came out. This is the news candle, right? It found footing at the previous 5-9 box, found footing at the previous hour midpoint within the first minute. And then the real news scandal came out and wiped out everything, right? So it's very important on these news scandals. Number one, not to get a bias. Like I am very, very, very much guilty of trying to find, because I use statistics and I want to see the market play out in the highest probability trade. Like I want to have a bias, especially going into these news scandals. However, like that's not smart for anybody. Remember, our job is to align live price with historical data. So in order to align live price with historical data, on these news scandals, the market's not going to show its hand instantly, right? You have the rest of the day. You have to get yourself in the mindset that in reality, the typical retail trader only needs one 15-minute candle to go their way for the day, and then they need a position size correctly off of that 15-minute candle, right? With the live price section of my system, does it allows you to track market conditions, right? And align the risk profile with that market condition. However, when you have candles like this, right? All this is telling me is that, hey, guess what? We continue to stir us up above the previous hour high, and we cannot close, even on the 1 minute, a body below the previous hour midpoint. But what I'm trying to say is, like, and we're above 5-9 box, right, on the news candle, right? So those are the clues that instantly step out to me. So my job is to make sure that, like, I sit here and I be patient. Yeah, like, if I think this was a reversal candle to the upside, then yeah, I can scale 1 to 2 micros here for reversal for a possible trend day up. But like, you don't have to rush it, right? There's no reason to rush the market, right? You have, most of you have between 4 hours to 13 to 14 hours that you guys look at the markets a day, right? So you got plenty of time to set the conditions for your success, right? And to skew the probabilities in your favor. I know a lot of people will tell you not to trade these news candles. If you have a system, like Austin Clark has a system that says trade towards the midnight, right? Starting at 8 o'clock. his backtest incorporates these news candles. So he's not afraid of these news candles. But unless your system specifically backtests these news candles, you probably should stay out of it and let the market condition show you what's up. Right? So now we're continuing to go higher. So if you did scale in right here after the news candles on the rejection of the low right here, the rejection of the mid right here, somewhere within this 5-9 box, looking for a reversal to start trending higher, this should be in 1 to 2 micros. Remember, a fourth of the position on reversals. So we've taken out previous hour high. We're finding support on the 5-9 box. But remember what I told you about the 9 o'clock candle 5-9 box. We like to spin the first before market on one side and then on the open go to the other side. And that's what we did. Found rejection, 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 all right here. Right? But like, so if you're thinking this is a reversal based off of wherever your probabilities are, right? You could have used that as a starter position. 1 to 2 micros, a fourth of your position. Right now, our eye should be on this previous hour midpoint. And this is where me and Jonathan this weekend we're talking about. But this is where it gets hard for people to trade, right? Because we know that we have this whole hour worth of overextension right here. And this is where it becomes key to pay attention to that 5-9 box. We've already given the clue that momentum is going to the downside when we took out previous hours mid, right? I mean previous hour lows. Now we're paying attention to previous hour mid to see price come back up and reject somewhere around here, and then or we do a low hanging sell where it's, which I don't even know if that's a word, that's something I just came up with on the fly, right? We're at the bottom portion of that hour. The biggest clue that I saw right here that said we might be heading lower was that we took out that low previous candle, right? And then another thing that I'm testing right now is this right here, right? These are boxes that are broken up into the 12-hour, and from 1800 to 06, right? I have to test this, so do not run my word on it, right? We know that this high right here, which is a structural high, had a 77% probability of being returned to. And we know that this low right here, these lows right here were 315, had a 75% probability of being returned to. So now that we have the probabilities of these lows and highs, right? Once it came up here, took out this high, took out these highs, and then reversed the 5-9 on the 930. Well, actually, yeah, the 930. Now we're at the low, right? Well, we're not at the low yet. We just hit 10 o'clock. Yeah, we were at the low because this one took it out. So now we're right on that probability that takes, so the next 5-9 box, which will happen in this candle right here, is going to tell us where the trend's going. Because remember, RTH nice. RTH tends to trend, especially on the 15-minute. It respects these highs and lows. So if it takes out this low, it's going to respect this high. If it takes out this low, it has a probability of respecting this high. et cetera, et cetera. So once we start taking out this 75% probability of these lows, right, my job is to capture that trend, that daily move, right? And then to make sure that it doesn't reverse on me during 11 to 12 o'clock. All right, so let's continue. So right now, we just took out the news candle and we're right here at this 75% low, right? But we haven't taken an outlet yet. We let the 5-9 box develop. Minute 5, there we go. Just had to let it catch up. And we're going to pay close attention to what happens here. Do we come up, find a ceiling at the previous hour mid, and then drop below, and then find a ceiling on this 5-9 box, or do we drop below, take out these lows, step above the 5-9 box to go higher? So in this case, right, we step below the 5-9 box, and now we're looking for rejection out of it. Low, mid, high. We found all kinds of rejection around the 5-9 box, and then we started dropping, right? So we can safely assume, because remember, the point of these 5-9 boxes is to get your eyes keen on, if this is the hourly candle, right? Where did the open, high, low, close happen on it? Where's the MAE for the MFE? Where's the consolidation for the manipulation for the distribution? Where's the retracement for the expansion? I don't know. Like, I don't know any more lingo for different communities I could explain it on. Then we continue heading lower, right? So now, right here, now you have Captain Backtest triggering for shorts on this candle right here, right before even the 5-9 box, right? It triggers. So within this 5 minute, right, Captain Backtest would have sold right here anyway, which is a trend system, right, that captures this H4 distribution. This hour opens up, we jump up, our eyes are paying attention to this midpoint. We let the 5-9 box develop. We step below it, right, with these 3 candles. Now we're trying to see rejection somewhere within this 5-9 box, mid, whatever, right? And then we know how the day went after that, right? It's 11 to 12. We're paying close attention to these 2 hours to see if we reverse and do a V-shaped puke day, or we continue the trend for the rest of the day. All right, so this hour opens up, 12 o'clock. We haven't given the signature that momentum is still to the downside. We're actually developing the 5-9 box right here. We're still below previous hour mid. So we're just sitting on our hands to make any decisions. I don't know why my 5-9 box didn't appear, but it didn't. And we're just doing a slow grind lower. So this is the first sign of a reversal, right? Look at the difference between the rate of change, and then this hour. Doesn't mean we have to cut our positions. That's what an irresponsible person who freaks out does. It does mean that we need to be aware that if we're in a high probable reversal area for the RTH, then we need to pay close attention to this 1300. Because this is such a small hour range, we can anticipate it taking the high and the low. So maybe this is one of those times where we pay attention to this previous hour mid and the 5-9 box. So if it does want to spike up and then reject down, you know, we're situated situated. Yeah, I don't remember the word I'm trying to say. It's 5 o'clock in the morning here. We're aware of that, right? And that's what we did. We came up to this hour mid, rejected it. Now we're back below the 5-9 box. We're trying to see, can we push lower? And then we're about to open up a new H4 candle, 1400. We're paying attention to see, can momentum continue to the downside on this Friday? And we do, right there. All right. Right here, but you can see that now we're in a ranging market. So is it even worth staying in the original position, right? We know that there's still a lot of movement because we're in a new H4, but I have to ask myself, is it worth staying in this position and not taking profit? Or should I scale some of it off? Now we're testing previous hour midpoint right here. We're going to see if we can get some rejection there. And no. So at that point, cut position and have a great weekend. Doesn't matter if it keeps going down lower. Cool, it came down lower. Right? So that's how Friday played out. Hopefully you guys had a good Friday. And now it's time to move on to this Monday. Monday. Okay, so let's build a system for the highest probable trade. So we've got first step. Somebody in the chat want to talk me through it? First step we do. You might remember the first step. I know a lot of you guys have watched me for a while. What's the first step of our process? Or my process? It could be yours if you want. I don't care. Almost, Jeremy. Yeah, I mean, yes. We could look at the weekly, but we know we're going to pull up a separate chart because this chart is going to tell us the momentum from the higher time frame. And we're trying to see, are we priced in too much for the month, right? So we have the 5 EMA right there, right? And we're going to where price is. And if we are between 2.5% and 5%, this is first, second week of the month, right? So we already know that we're starting to get overextended from a pricing standpoint, but we can expect, because it's the second and third week of the month, to continue down lower, right? Because the variance says that we can go between 2.5% on that mean all the way down to 5% without expecting a reversal. So we're aware that we're starting to stretch out a little bit to the downside, right? Now we're at the NFP. This is wild. I got out of the 10 years I backtested this. I don't think I've ever seen a market condition like this so far. All right, so now we're on the daily chart, right? We have all months ranges marked out. We have all NFP Fridays marked out. Right now, what we see is, look at this. This is last month's NFP range. This is this month's NFP range. Jonathan, look at this. This is wild. I've never seen, and it's almost to the tick the same size day for NFP to NFP. Insanity, right? So yeah, like we're looking right now to see how we operate this week within NFP's Friday's range. Do we stay below previous month 50%, or do we get above it? Do we close outside of NFP Friday's low? If we close outside of on the daily chart, if we close outside of NFP Friday, we look 60 days lows, right? So we will have high expectations that these lows will be taken out, right? If we get above this NFP Friday range and we're above previous month 50%, we look 60 days back, 20, whatever. This is 60-day high, and we can expect all new time highs. Might not happen this month, but that's our expectations because this whole chart is to measure the momentum of where we're going using previous month 50% and NFP Friday's range, right? If we're below both of them, right, we're looking for the high of the day between 5 and 11. If we're above both of them, we're looking for the low of the day between 5 and 11. Because we're still stuck in this same freaking spot we've been forever, right? Like where it's not giving us, it hasn't given us clear market clues for over a month and a half now, right? We look for both. And we do that based off of where London and Asia have played, right? So right now, we can see that Asia's all the way down here, London's all the way down here. So this is indicating that I'm looking for the high of the day during that New York time frame, right? This day, because when a kind of a range bound market, Asia's right here, London's right here, right? This was an NFT Friday, so it was just a weird day, right? We would be confident to say you're looking for the low of the day here, right? This day, they're flat. Asia and London are flat and trapped on each other, so you have to look at both sides of the day because we're not in a trending market in any direction. When we're in a trending market, let's go to a trending market view. When we're in a trending market, it is obvious, right? Low of the day scenario, like low of the day scenario, right? Low of the day scenario was in Asia, right? Like it's obvious. So now the part of our model we go to is this one right here, right? Well, we're going to put, we see market clues. We're approaching previous day's midpoint. So we want to see how price operates around previous day's midpoints. We have not taken out the low or the high, so there's no momentum clues from the previous day, right? Now we put in our time-based probabilities. We have midnight, which has a 75% retracement. Never get, well, get retraced back into at midnight 05, like right here. You can see that this little wick met the quota and retraced into it, right? We put in settlement 1615, which has a 66% probability of being retraced into, and that's been already returned to, mitigated. And then you have Globex Open, right? Which is at 1800, and that's obviously been retraced into, right? Which has a 70% probability of being returned to. All right. So now we have our structure-based probabilities. So you have structure 1, and you have structure 2. Right, so this is 520. This has an 82% probability of being returned to. Six, 3, 5, 82. Save as, strut 2. And what these structure-based probabilities are based off of Remember I told you I was working this weekend off of this 12-hour candle from 1800 to 06, whatever the lowest low on the 15-minute candle is and whatever the highest high on that 15-minute candle from 1800 to 0559 is going to be, all right, taking out already. So these are going to be our structure-based probabilities, right? So we can see that this high right here has an 82% probability of being returned to, right, within this new 12-hour period. That will take us throughout the rest of the day, right? It's returning to it now. And since we have all this stuff to the downside, now I'm paying attention to see if we can get down here, right? And do we get rejection off of this midpoint right here, the previous day midpoint, or the previous 12-hour midpoint, which is also the previous day's midpoint. All right, so now what we do, right, now that we have our time-based probabilities, our structure-based probabilities, now we're going to incorporate what Asia and what London has done, and we're going to pull projection-based probabilities and put them on our chart. Right, using DR's time frames and the DR ranges. This is the Asia. This is the London. This is from 1930 to 2030. This is from 03 to 04. Right. If you have a database, right, you're going to put it in and you're going to say, hey, Asia went long and never returned. Right. London has went long and hasn't returned. Right. Because that's the information that we have right now. And that database will tell you what the highest probable New York location is going to be for 10:30 to 9:30 to 10:30. So I put in long true for Asia, right? And I started with 4,200 days. Now I'm down to 806, right? I say London so far is long, and are any of the midpoints broken of these sectors? No, they're not. So those are left unchecked. We have 806 days, showing that the highest probable range for 9:30 to 10:30 should be engulfing London, right? Oh, it's actually an upside like this because we have these probabilities below us. We can't like that. These are all based off of 8 o'clock to 1600. We can't just say like we're just using this probability and this is what the 9:30 10:30 is going to be. No, because there's other probabilities that we're stacking on top of our analysis that say like, hey, guess what? There's a high probability of this being returned to this midnight retracement between 8 and 12, right? And since we're not, I finally get stopped out. Yep, stopped out for a loss. All right, time to make that up during the open. No, like I got stopped out because I was trading for these lows right here, and my pricing, my risk profile just stopped me out. So now we have to incorporate the fact that, yes, just based off of what Asia and London did, we have a 34% probability that New York 9:30 to 10:30 will open like this, and that there's a 55% probability that after 10:30 we go long. But here's the thing: you have 27%, so 34. Let's write this out. You have 34% that we stay above London, right? But then we have a 27% based off of what Asia and London did that we engulf London. And then we have 9, 6, 5, so 9, 15, 20. And then we have a 20% that we are below London's high. Right, and then we might as well add this 11% and 7. So 41 and 1, so 52. So what I'm saying here is this is London's low right here. There's a 52% chance that we do something like this, right? But that this low holds for 9:30 to 10:30. There's a 27% probability that we engulf both sides. And so there's a 20% probability that this high right here holds during the 9:30 to 10:30, right? So what I like to do, and then there's a 55% chance based off of what London's done so far that we go up from 10:30. And there's a 39% chance that we go short. And then there's a 6% chance that we stay in the 9:30 to 10:30 range, right? So now, if there's any questions on this, like please bring them up. So now our job is to take these statistics, because these statistics derive from what Asia's done, London's done, and incorporate them with our structure-based probabilities, our time-based probabilities, and then like this is where we put in our OU lines, our over-under lines, because our over-under lines will tell us that momentum's shifting, and what OU will tell us momentum is shifting for the sessions, right? And I use the midpoint or the 4 o'clock, but since the 4 o'clock's at, where is the 4 o'clock? Yeah, since the 4 o'clock's at this high, I'm just going to use the midpoint of London. And that's going to tell me, once we start breaking down below this, to start targeting these lower probabilities, right? And then I'm going to have my Asia OU line, because these midlines, right? We started getting into it on Friday's session when I was showing you guys the power of the 9:30 to 10:30 midline, right? And how you can see the shift happen if we decide to put the high or the low of the day in from 9:30 to 10:30. You can see the shift. Good morning, Mr. 9:30, right? So now we have met this probability of the structure stat, right? And we have put our time base, our structure base, and now we're going to do our projection base. Based off of what Asia and what London has done so far, we can pull the probabilities of that. And if you're an ICT-based trader, guess what? You can use the central bank dealing range to pull projections off of and build probabilities from. You can use the flout, just use whatever. Like I use the error concepts, but it's the same concept. Yo, Jimmy's my boy, dude. I guess still have to talk to him about this shenanigans that I'm dealing with right now at work. I might have to get a job with Jimmy. Alright, we're gonna make these green. This has a 65% probability, and this has a 43% probability. Now we need to do our lower targets. This is a 52. Wait a minute. Nope. This has a 38. Now people will look at this 38 and blow it off, but guess what? Is momentum down or up? Right? Of course, the higher targets will have higher probabilities because guess what? The NASDAQ is designed to go up and to the right. However, momentum from the higher time frame has given us hints that it might be shifting, or it is shifting. There's no might to it. So we don't just blow them off because the numbers are smaller, right? And because Asia is doing what it does and London is doing what it does, like we have to respect this, especially once those midlines in the kill zones or for the ICT based traders or the DR traders, like you call them the DR sessions, right? Like you've got to respect them. Like once those start breaking down, right, you've got to give these lower number of probabilities because right now the market hasn't shown its hand, right? We're in the mid, we haven't taken out previous day's lows and momentum is up. We're approaching the previous day's midpoint and we have to be respectful of that, right? So if we come down and we break this London OU line, we have to expect that targets are going to go lower, right? Let's put this right here. Right, so now we very much went detail into how to build the time-based probabilities, the structure-based probabilities, and the projection-based probabilities. Now our next step is to put in our ranges, right? Go to the VET. We see that the average 10-day range is 420. Oh, time to smoke weed every day. That's crazy that the average daily range is 2.24%. That's wild to me. This is definitely a dangerous market. And that is 420. Right? So this is the playground that we have to play with, right? And right now, we can see that this much of it has been touched, right? And we've already met 60% of our average daily range, and it's not even open yet, right? Given these, given this London OU, once that gets breached, or the 930 to 1030 midpoint as it's developing, if those get breached, the probability of us coming down to these higher probabilities that haven't been returned to all night. However, if we can't breach this OU, this London OU, or the 930 to 1030 midpoint, we can expect a trend day higher, right? Do we expect us to come out and take out the previous day's highs? No, because like there's not enough in the checkbook. We could, but what news is going to push us up here, right? This is previous day's highs right here. That means we would have to have an anomaly day, which is possible. That means we're going to move 600 handles off of no news to get to this previous day's highs, right? What's the likelihood of that? We can, you don't dismiss it, but we let the live price part of our trading in the 5-9 boxes guide us that way, hour by hour. All right, so now we're going to get our other distributions, right? Last 16 weeks, 4 to 8 usually moves 0.45%. And we just met that, I think. Nope, we haven't. We still got that much left to go. All right. We've got 8 to 12. Thanks for joining in, Jimmy. It means a lot that you're in here. Like, y'all guys are the best community in the world. Support an old vet like me. 1.14% between 8 to 12. And then we have the 12 to 16 distribution that we're trying to measure out, which is 0.86 on a Monday, right? So now we put our time-based probabilities, we put our structure-based probabilities, and we put our projection-based probabilities. We have our probabilities of what New York is supposed to do from 9:30 to 10:30. We have what New York is supposed to do, well, the probabilities of what it's going to do from 10:30 to 1600, right? So now our job is to align these distributions with these puzzle pieces, right? Because that's what they are. They're a puzzle piece. This whole market is a freaking puzzle, right? And we can see that these 16-week distributions go over, right, the average 10-day range. That's because these distributions are looking at the last 16 Mondays only. This distribution, the average 10-day range, is looking at the last 10 days, every day of the week, right? And that gives us wiggle room to understand where we are and where the retracements are going to happen at, right? And we know for a fact right now, H4 momentum just shifted up, right? So we can expect, let me make sure this should be at 8 o'clock. And this should be at 8 o'clock to 12 o'clock. Right? And we know that right now we have to ask ourselves, where do we expect price to close? Like at 16.15, is price going to be above us or below us? And right now, statistically, it's telling us we're going to close below, right? So we can expect something like this for the day. I'm going to change these colors. I don't like this. These need to be red, white, and blue. It's not enough America on my chart. Make these red. Time base will be red. So time base is Globex, open, or 1800, midnight, and settlement. So 1800, midnight, and 1615, structure base, which is the highs and the lows probabilities between 1800 and 06. We're going to make these gray to represent white. And those are our structure base. And we're going to make our projection base blue. Why? Because America. That's why. And if you're not from America, I'm sorry. Like, I'm not trying to offend you, I promise. I think every man should have love and support for his for his God, his country, and his family. Everything I do needs my last name. My actions need to reflect my last name, and my last name needs to reflect the character and values that I have in my country and my family and in support of my God. Weird thing that I'm talking about on a trading show. All right. Didn't she say New York had a 54? Yes, I did know. I said, yes, it has a 55% probability that we go long, Jeremy. However, remember this chart right here, right? Remember that we're below NFP Friday's range and we're below previous month 50%. Momentum on the weekly is shifting down, and Asia and London is going higher. So we expect to run into the high of the day between 5 o'clock and 11 o'clock. So we're expecting these probabilities of the higher time frame momentum to shift for us to reject during and establish the high of the day between 5 and 11 o'clock, right? So we're expecting us to close lower. Does that make sense, Jeremy? Because this data right here that we pulled that is based off of 20 something years of the NASDAQ market, and 20 something years of the NASDAQ market will skew the data to the upside. That's why I say pay attention. Don't even incorporate this plan until we breach this London OU line, the London midline and the Asia midline. Like, because right now we're still long, and if we go to our live chart, right, we're just now breaking below the 5-9 box from the 6 o'clock candle, right? We stepped below it and we're finding resistance here. So now we're looking at number one, previous hour midpoint, and this OU line to see, are we establishing? This motherfucker stopped me out just to turn around. I am going to, I'm going to act professional right now, not get pissed off. Because, like, I held on to a losing position for way too long, just for it to start turning around on me. All right. Oh well, these things happen. So now we're going to pay attention to this OU line, and we're waiting for these hourly boxes to show us a reversal. Right? What a great way to start a Monday. So in reality, like, if I'm gonna, like, I personally don't even know how much farther of previous day 50% we're gonna get to. Yeah, you see, Jerry just said exactly what I said. Another point I look at is the midpoint of the prior day full range. Yep, that's right here. Because we've seen so many times in the past rejections from these previous days midpoints. Like I said, when we do our projection-based probabilities, right? Yes, these have higher probabilities of being met, but that's because when a market skewed to the upside, right? So that's why we pay. But when momentum from the higher time frame is going down, we have to incorporate that momentum, and we have to respect these lower number of probabilities because they almost have just as much weight as these, right? So this is, I don't know why I put 9:30 or 10:30 right here. Exactly. Like, I can put it all the way up here on this 65% probability that be met, and then we go lower. And this 9:30 to 10:30 is one thing I didn't mention in this show, but I mentioned plenty of times. This is the opening range drive, 9:30 to 10:30. Over the last 10 days is 186. This is 186. So that's how I draw that out. All right, let's see. Winter cap in. I'm late on parade this morning. I had a play with the vet over the weekend. Looks like an amazing piece. Cap apex flows once we respect 10 AMC from Friday. Yeah. Okay, let me make sure there's no more questions. All right, this is getting more detailed and um for a reason, and like hopefully like you guys are seeing how I build my probabilities and how each thing that's on my chart has a specific reason for me to use, and it helps you build a workflow process for yourself so you can place better trades for yourself, because at the end of the day my job is here is to lead by example and show you a repeatable workflow process that does have probabilities behind it so you can do it for yourself. And because I want everybody to not lose their money in this market, I want everybody to take responsible growth and realistic expectation mindsets and make money in this market. But if nobody has anything else, I'm going to jump for the day and lick my wounds from my loss and just make them up, because I'm a really good trader and I know how to do that. When it rains, it pours. Anything? I'm going to give you guys about 1 more minute to put any questions in the chat, and we will go from there. Right now, I'm talking to 2degrees about building an indicator that will put these probabilities on your charts. That way you can have a dashboard that you can do it all yourself. Kind of like the vet does with these probabilities, but like you guys don't have one that gives you what London does, what Asia does, and you guys don't have a way of doing the projection-based probabilities properly yet, and that's what I'm trying to build for you guys. Well, you know what? Before I leave, let's do a quick study, right? And I think this will be beneficial, right? Let's hide all drawings, right? And we're going to look. This is the 1800 to 6. I'm not going to put the probabilities on the chart, but realize that each side of these have between 75 to 85% probability of being returned to. Let's look at the relationship, and we know that New York has a trend-based probability is more likely to trend than the overnight is, right? We know that the overnight has high probability of retracement, which happens between 1800 and 06. We know that the 930 and 1030 likes to firecracker those probabilities, which gives them that it does, but it doesn't incorporate the that what Asia did, what London did into the probabilities like I like. So back to this, we know that if we're on a 15-minute chart, right, we know that from 930 to 1600, there's more probabilities of having a trend or a V-shaped puke day, and that puke day reversal usually happens between 11 and 1300, right? And then 1300 to 1400 confirms it, right? If we are going to suck back into the range. But we know that this 1800 to 06 has high likelihoods of being retraced to, right? So what I'm trying to test right now is, do we come up and wipe out both sides to revert and then firecracker to the other side? This day we did. This day we did. So this is a V-shaped puke day. This is what I'm talking about, right? We take out this side of the 1800 to 06, and then we take out this side. We start trending, but then we reverse and have a V-shaped puke day, non-trend day. All right, this is the 1800 to 06. We leave all these probabilities open. We just go high, and then we have our V-shaped puke day where we suck back into the range, right? This day, right, we don't even care about any of these probabilities of the upside. We just go, right? Now, if we look at this, just like I tell you guys, the midpoints are just as important as anything else, right? So we put our midpoint, yeah, we're just gonna have to use this. right? From London on our chart, does it ever get returned to? No. Do we ever get back into that range of London? No. And then if we're tracking our 930 to 1030 midpoint, we never breach back over that, even as it's developing. So that's the, and then if you use the 5-9 boxes and the hourly boxes, you would see clear as day that none of them got back above previous hour midpoint, and they all rejected the 5-9 box instantly on those kind of days. This is a holiday. We're not going to look at it. All right, so this is one where we take out the high, we reverse, and we come and take out the low of this 1800 to 06, and then we just sit here and zigzag, right? This one, right? We come in, we take out the high, take out previous day's highs, and then we reject the previous day's highs, and we suck back into the range, right? Respecting this previous hour mid, we break the London midpoint, but it's at the end of the day. Before this end of the day breached the midpoint of London, right? London's midpoint never got returned to. London's OU line that I'm always talking about never got returned to, indicating we can't short, like, it's not a complete collapse trend down day, right? This was a clear rejection of previous day's highs, right? And then we sucked back into the range around that 12 to 1300, confirmed it to take that short. All right. I thought I erased Rollins. Yeah, I did. All right. So now look at the relationship here. We take out the 1800 to 06 lows. We reverse on the open, come out and take out the highs. Right here, we completely reject and we trend day lower, right? We breached the midpoint of that 3 o'clock to 4 o'clock range during the 6th, telling us to expect lower prices. This one, we go higher to go lower. We took out both sides of that 1800 to 06. This day, we took out both sides of the 1800 to 06 trend day low. This day, we took out the high, then we took out the low of this 1800 to 06. This day, we failed to take out the high, but we didn't need to because all these probabilities going up are taken out here, right? By 315. So when we returned on the 930, our job was to take out these probabilities going down. We had no need to take out this one singular probability. Same with here, right? We took out all the low probabilities, right? 4 o'clock, we reverse, right? And then we come and take out the high of this. Same thing here. Another fucking 2:45 to 4 o'clock, right? We leave that one open. We take out all these highs. Our job was to come take out the lows and then come take out these highs right here. Because remember, the highs and lows in this box from 1800 to 06, they both have high probabilities of both getting touched. Right? Our job is to understand the relationship of the live price market that we're in to show us what it's doing. When I say V-shaped puke day, most of the day is because we've taken out the highs and the lows, and we have a portion of that 1800 to 06 still left, like you see here. And the V-shaped puke, that sole purpose is to come up and take out those probabilities. Right? Does this make sense so far? High, low. I will check that out. Right now, my next month is going to be to pull data on CL, but I just don't want to get the viewers confused with two assets right now until they properly understand this workflow system on NASDAQ first. But eventually, we will be going over to gold and CL. But Jerry said, Cap, look at the CL on an 8-hour box. I'll definitely do that. Does this make sense to you guys so far? This is the next part that I'm going to be working on. If not, I'm going to jump off here. Hope you guys have a great trading day. I want to sling like 20 contracts at NQ right now. What a dick. Like, it tick stopped me. What a dick. I hate. Okay, so I have a personal vendetta against getting stopped out and then price going in my direction, especially when I was sitting commercial hedging or DCAing into the loss the whole night.